Key indicator for the stock market, that is the price of oil. We're at $87 a barrel now. We had been at 88 just moments ago. We've got this coming to us from the Wall Street Journal. Kuwait says they are cutting oil production after running out of room to store up its bottled up crude. $87, $88 a barrel for oil. As you saw, we had the February jobs report, 92,000 jobs out of the economy, and the unemployment rate went up to 4.4. Connor Hansen joining us. What does this mean for Trump's economy, Connor?
Hi, Stuart. Those jobs numbers looking worse than expected. Economists predicted going into today that employers would have added 59,000 jobs last month. But let's take a look at the individual sectors here. Healthcare lost 28,000 jobs following a large spike in January. Leisure and hospitality lost 27,000. Construction losing 11,000. The federal government with 10,000 less jobs, and manufacturing down 12,000. The one bright spot, retail trade, was up by 2,300 jobs. And revisions to December and January show 69,000 fewer jobs created than previously reported. December coming down by 65,000 and January down 4,000.
Yeah, obviously that's a poor report. It's not what was expected, so it's disappointing to see that. I would say these numbers, as we know, bounce around a lot.
Unemployment growing to 4.4%. It was expected to hold steady.
Yeah, well, right now, first of all, we weren't necessarily surprised, or I'm not surprised with the number. Disappointing, of course, but I think with the winter storms that hit, I expected some decline in retail and construction as well.
Another number we watch closely, foreign-born workers have lost 519,000 jobs, while native-born workers gained 128,000. Stuart.
All right, Connor, thanks very much indeed. Labor Secretary Lori Chavez-DeRemer joins me now. Madam Secretary, 92,000 jobs out in February. Fewer jobs in healthcare, fewer jobs for information services because of AI. The weather hurt things, government employment down. If you add it all up, it doesn't look good for the Trump economy.
Yeah, I couldn't agree with you. I think we have to address the fact that this is not a good report in its raw numbers, but we have to also talk about why this possibly has happened, this snapshot in time. It was mentioned, the weather. We saw healthcare numbers go down. We saw a record strike in California, over 30,000 jobs lost there, but that has been resolved, so we're hoping to see those numbers tick back up next month. But overall, we've gained 60,000 new jobs over the last 2 months. So this is important for us to recognize what the message is here, what the noise is, and how focused the Labor Department is in making sure that we can bring back those jobs in construction, manufacturing. We're seeing the confidence go up. We've seen the investments that the president has made. I've said it over and over again. The president and I talk. We visit on this often. It's important to him. We're laser focused to make sure that we have that skilled workforce, and it's just going to take some time. So we're recognizing what happened this month, and we're going to stay laser focused to bring those jobs numbers up. But when you think about it, look at the real wages. That's exciting for us that we've seen real wages go up as well.
I see that 519,000 fewer jobs taken by foreign-born workers. Is that the impact from deportations?
Well, I think it's probably a mix of both. Securing the border certainly was important to the president. We want American-born workers to have access to these jobs, and those are the numbers that we've seen tick up. Same with federal government jobs. That was important to the president as well in this administration, that we right-size the federal government and make sure that we're creating private sector jobs, and that's why you're seeing so many companies across this country have these investments in their workforce. I'm at 49 of my 50 states. I'll finish up in Oklahoma this week on my 50-state tour and talking to our businesses, our private sector businesses, and how they're investing in their workforce, and that's important. And we need to create more jobs for our construction, for our machinists and operators. That's what we're focused on doing in the skilled trades.
The midterms are about roughly 9 months away. How soon can we expect the jobs picture to pick up sharply, more jobs coming into the economy? When are we going to see that?
Well, I think we have seen that tick up a little bit. Again, this number in its raw numbers is not something we wanted to see, but overall we're still better than what we inherited from the Biden administration. So again, in the last 2 months, Stuart, 60,000 jobs have been created, and we need to remind ourselves that I'm working with our community colleges and our tech schools and our private industries so that we recognize what the market demands are and get in that trained workforce as soon as possible.
Madam Secretary, I want you to take a look at this article. It's from the New York Times, and it says, quote, big revisions are a reason to question jobs numbers, not dismiss them. And we did get revisions for December and January, 69,000 fewer jobs created than previously reported. So can we rely on your numbers?
Yeah, absolutely. I think the president, that's exactly what he was questioning early in the year when he took office. And he has now a new nominee, Brett Matsumoto. And as he makes his way through, we don't like to see these revisions. We want to make sure that we have integrity through BLS. We have integrity in the numbers. And so as soon as his nominee is confirmed, I think you're going to continue to see the accuracy of these numbers as we report in 2025 and 2026. More accuracy, because that's what the American people are expecting, is integrity through the Bureau of Labor Statistics, so we can count on these numbers for everyday Americans and for the markets. Madam
Secretary, I want to thank you very much for coming on the show today and being straightforward and honest about this report. We appreciate that, and thanks for coming.
Thank you, Stuart. Bye-bye.
Ray, you still with me?
I'm still here.
You're the tech expert, but here's one area in technology. AI is really cutting jobs, isn't it?
It depends on where. If you're finance, HR, back office, you're going to need 1/10 the number of people as we do today by 2030. And that's really what it is. But if you look at 2030, the reason that's an important date is that's the replacement date in population. There's a forecast that says 170 million jobs net gain with AI.
Well, we shall see. Ray, thanks very much. The open chip futures, please. Plenty of red ink today. Down 600 on the Dow, 400 down on the NASDAQ. The opening bell is next.